My name is Gabriel Brent, and I am the programmer slash trader behind the Appazone software. Okay. Um, Basically, Appazones is the program and the software that has journaled my trading journey. So as it has developed, I've developed as a trader as well, and we can continue to develop together. But what I'm going to talk about a little bit today is event-based trading, just to highlight some of these ideas. Basically, coming from a programming standpoint, um, whenever you click your mouse, that is an event. Whenever you highlight over a button, that's an event. And in trading, there are different kinds of events. I think there's um, trading events or like account events. There's the market events and events based upon price action. And so there's really kind of like three types of different events, and I'm going to kind of go real quickly through them. But I like to start off with looking at the probability of losing streak, because I really wish somebody would have showed this to me when I was first starting off trading. Um, this is just an amazing graph. Um, Statistically speaking, out of 100 trades, what this means is given any winning percentage, we can expect to have a series of 2, 3, 4, 5, however many losses, giving your winning percentage out of a sample size of 100 trades. So just giving statistical probability, I mean, you can still be winning, 70% plus and still have 5 losses in a row. And to me, mentally, this just made the biggest difference in the world. Um, just based on the sheer fact of this is probable. Here's your outliner over here at 6, but 5 losses in a row at 70%, that's statistics. So looking at that and being aware of where the outlier truly lies, this changes my whole perspective as far as um, where do I really need to come in as far as the winning percentage personally. And so those type of events, like those trade events that happen, when you're settling up with your broker, this just spoke volumes to me. So I thought that was a good place to start, because I really do wish somebody would have showed this to me when I first started. I just think it's really, really interesting. And then market events. Now, because I know most of you here, I'm just going to kind of go real quick through this. We are completely technically based here at Appazones. It's all about the bars. Um, how it made me think of that song, All About the Bass. Yeah, anyway, I'm not going to sing for you, but it's all about the bars. And the funny things that pop into your head. Anyway, um, I need to make a trading parody of that song. Wow. Okay, sorry. Um, so market events, basically they are when we when we make a new low, like down below this low, when we make a new high up above this previous point over there. We're looking to understand context by understanding these market events, because the market tends to expand and contract. It tends to breathe in and out. It's just like us, The markets imitate us very well because it's mass psychology, it's hedge funds and pension funds and day traders and swing traders. Everybody comes into play into this thing. So I don't think it should really come as a surprise to us to see the basic ideas of support and resistance. Sometimes they don't exactly play out like we think, and we need to give the market leeway because there are so many different participants. The big people need to average in and out as they come in and out of their positions, and the day trader can jump in and jump out because he's got small size. All those things come into play. So if we're going to really understand support and resistance, supply and demand, I think the zone is definitely the way to go, because it gives us an area of defining, hey, if we can identify, if these zones can identify consolidation and then expansion, and these zones identify consolidation first, if we're not inside of a zone, we should be expanding, basically moving from supply and demand back and forth. Very simple principles. So all the zones on the right side that have the red numbers, those are all resistance or supply. All the numbers in green are support or demand. I know many of you know this, but I know there's a couple out here that aren't. So that's what we're looking for. And I just think it's really cool because, I'm able to actually put all four of those terms, supply and demand, support and resistance, into a nice, neat equation. So for all you equation buffs out there, if you're like me that like the statistics, the equations, support and resistance plus time equals supply and demand, okay? And this is how we do it, okay? This is how we add time into our analysis, because that's all we have when it comes down to it. Your broker is just giving you market data over time. What you do with it, how you process it, that's all up to you. But that's what they're giving you, So I figure it's best to use the most simplistic concepts, just like we're talking about supply and demand. If that stuff doesn't make sense, then why do I think that all this other sophistication will, So again, I'm just trying to keep it simple, but it's the way I see things. So with the zones, we attempt to identify where is high and where is low, so we can stop from selling into the low of day or buying into the high of day, because we have an idea of context. We understand what's going on, and you can use this on any chart, any time frame. Swing trading, day trading, it's all the same. It's just a different chart. That's all it is. And then coming into time, how do we apply time to our analysis? Well, in the day trading time frame, it's really easy for me to do so, and I actually came up with this app time tool, which is absolutely amazing because I can just trade at these certain times of day. I don't even watch the charts when the background is white. I could care less what the market does. All I want to do is see where we are. Are we high on the curve? Are we low on the curve at these times of day? And I make a decision. That's really it. It's no more complicated than that. Because I found that with trading over the years, less is actually more. Not having to watch the charts for 8 hours a day is so freeing, and it's absolutely amazing. So. What I'm trying to see at these times of day, and this is just the top and the bottom of the hour, and this little green stripe is the first 15 minutes. I found something magical happens there too. Maybe it's when everybody goes and gets coffee. I don't know, but you like sit down to the computer, place your trade, then you go get coffee. I don't know, but it seems like we do all these patterns, we eat breakfast at the same time of day, eat lunch and supper and all that kind of stuff. So that routine, that pattern has found its way consciously or subconsciously in our markets. And you know what? I'm just going to keep it simple and just bank on man doing the same thing, history repeating itself over and over again, and I'll take it to the bank every day. And there's nothing complicated about that at all. But I just really enjoy, keeping it simple. The simpler I can keep it, the better I do. So this is the Tic-Tac-Toe Method. It is from the app of methods. This is the premier, the apex of the Apazone system. There's a trend follow piece with it, and once you define the trend, so many days when the market does trend, it ends up just like this, and it's absolutely amazing. So I really enjoy it and the simplicity that it's bringing to my trading, and hopefully it can do something for you too. But it's all based upon reading, understanding the bars. It's all about the bars. I so want to sing that song, and I'm so not going to. But anyway, I'm going to skip some of these other slides because I think most of the people here know what I'm talking about. Um, a lot of you guys have seen me do this year in and year out. So I'm really fascinated by swing trading lately, and I know that you saw me writing about it a little bit earlier, but I don't know. It's just something really, really cool that I'm just really diving into. I started up my own little swing trade account, so I just threw 20 grand in there and thought, hey, let's do this. So, so I'm really excited. But let's go into this and we will see how it goes. Okay. Um, Actually, let's for the new people out here. Let me explain to you what's going on because this might be completely new to you, and I don't want to talk above your heads at all because that's just not cool. So let's start at the big picture. Okay, so weeklies. Okay, what I'm doing is I'm going to have 3 time frames. I like to use like 3 time frames of confluence, kind of like that previous slide that we had. Bigger time frame confluence and things of that nature. So what I'm wanting to do is make sure that I'm buying low and selling high because, that's the key, right? We're trying to buy low, sell high. How many people here have ever knew what the market was going to do, but they had a hard time getting on board? Any hands? Any hands? Yeah, I see a couple of them. Thank you, guys. Yeah, that just kind of stinks when you like, no, and like, oh man, I knew the market was going to do this, and like, then you like see it happen, and maybe you go off and I don't know, have to pet the dog at that time or something subconsciously. You just don't want to pull the trigger, but you knew that it was going to happen, and then you see it happen, and you're like, oh man, that just stinks. And then you're like, I should have done that, man. Why didn't I? Like that. I hate that feeling. And so I've come up with a couple really cool ways just to get around that. And that is basically to be predicting out what we're going to see price action do. Instead of being reactive to the market, instead of watching all these indicators all over the place, we want to buy low and sell high. But if you have no idea where that is, then it's almost impossible to do that because a lot of oscillating indicators just tend to lie to you. And that just totally stinks too, because you think, oh, well, it can't get any lower than this. Haha, man, were you wrong. So anyway, the idea here is really, really simple. Like on what the YM charts, we know that we have bigger levels here. You can see how big these weekly levels are, and we're inside this big, fresh weekly zone. You can see where they are, and then we jump down into the daily, okay? And in the daily chart, if we're swing trading here, we see price reloading in here, and this is key. I'm just going to give you a huge golden nugget. If you can identify when you have like an inside candle right here and you're using the zones, and the zone software is really awesome because you can have a whole bunch of options. Like if you want to turn them all off, you can do that. You can show dead zones, which are like zones that, like as we see the flip-flop of supply and demand, support and resistance, you can see all the previous zones here. So that's really nice. And then this one that I like the most, which is just show the current one. So now you have a nice, neat chart as you show all the zones, but you're just actually seeing the most recent two. Like that's just cool to me. But understanding that right in this zone when price was doing that, well, first off, look at the trend line that it's bouncing off of. Okay, there's a nice little trend line that I drew from somewhere over here. Oh, there it is. Yeah. So trend line bounce, and we're inside the zone. And we put in this nice little green inside candle. So we've gone from expansion, moving from one zone down to the next zone into this really tight consolidation. And it's like Whenever you see that inside candle there, like that's just a sign from God saying, hey, you know what? The market's consolidating, and guess what? You're at a low area. Look for the market to expand, and sure enough, it did. Boom, you know. So that I just think that's really cool. Now what we're seeing is a pullback, okay? So possibly people that may have gotten long out of this ride, I really wouldn't be surprised to see the pullback stop right around in this area, because that's exactly where those high of those candles are. And if you're getting long, you might have gotten like a T1 on a swing trade type of deal. But guess what so many people would do? And maybe you've done this before in the past as well. Have you ever like got your T1 and then you're like, oh, guess what? I got my T1, so I'm going to be all protective and I'm going to move my stop to break even plus. Oh, well, now you're stopped out. So do you re-enter again or not? Well, after many years, I don't want to move my stop up that much, okay? I want to let this thing run all the way up here, and actually one tick outside of that. Boom, there's target 2. So I want to get a quick target 1. Let's just say your quick target 1 is there. I don't know why, let's just say it's there. Okay, and then you pull out your T2, and then I like to run a T3 as well. And it looks something like this, So just shoot for the moon. Make it look good. Make sure you write your grandmother and say, hey, Grandma, guess what I did? Like that's what T3 is all about for me. So anyway, maybe you ought to rate your economics teacher in high school. Hey, guess what? Mr. Vote, look at what I did. I bought low and I sold high. So I think that's pretty cool. Yes.
Gabe, it's Tom. How are you?
I'm doing okay. What's going on?
Just for some of the newer people in the room, maybe you could just expand for a minute on your what T1 does for you in terms of protection, and
Oh,
that's one of the reasons why you don't move your stop, part of your philosophy or your style.
yeah. So that's the idea that we have coming from the overall trade idea and where we're getting our context from like the daily. Now you'll also notice that on this chart we have the background painted green. Okay, this is from this App Trender, and right now the App Trender is completely flat. It's just, well, anyway, I won't use any crazy terms there, but it's just completely flat. And it's flatlined. Okay, I had to say it. All right. So what does that mean if it's flatlined? Well, this trender was built around the ideas of keeping us in even though we experience major pullbacks. All right. So when it goes flat, it usually means we're entering a region of chop. All right. That's usually what it means. So yeah, we've made a new high, and the trend is still up, but guess what? It looks like we're kind of bouncing in between these two levels in general, right? I would say so. So, and that's okay, that's totally fine. If the market wants to do its range thing right now, buy low, sell high, keep it real simple. So that's what we're gaining from the context chart. And then as far as the entry, and this is the awesome part that Tom brought up here. It's fantastic how simplistic it is, all right? So if we know, and let me superimpose the level just so that you can see the daily level onto the 60-minute chart. Or if you're lazy like me, maybe you don't want to have to like draw that that little rectangle in NinjaTrader. So what you can do is you can actually get Apazone's MTF, and I'm going to put 1 right there, and I'm going to grab it from my day, 1 day, and I'm going to superimpose that level from the big 60-minute level, or I'm sorry, from my big daily chart onto my 60-minute chart. Okay, and I need to make sure that I'm going back enough days just so that it can find it. So I'm going to throw this back 180 days just to be safe. And it'll take just a second or two to process. But now, you remember where I drew that rectangle from the daily chart? You see where that is right now? It's you see the 1D and then the number right there? That is this level superimposed on my 60-minute chart. So technically speaking, I can take all three of these charts and I can put them in one. And I can grab all those levels and put it into one nice neat package. Again, just trying to simplify things, keep it a little bit more simple. And I can also just highlight the most recent levels that we're looking at right here. Okay, so the interesting thing about this level is from a 60-minute time frame, let's just talk about entries, okay, and why T1 is so important into this equation. All right, so once we see the bounce of the daily zone, and once we see it bouncing off the 60-minute zone down here, we can come in and say, okay, when has price action failed to break this level? So basically we have the APA methods, and if we come back to the APA methods slide here, just to show you a little bit of what this thing does, it actually plots out a diamond or an arrow whenever you have a single bar engulf or a double bar engulf. So guess what? You have a red candle touching this blue zone down here, followed by a green candle. So that would give us a dot, or that would give us an arrow. That means price has respected the zone, okay, and we have price confirming that it wants to move up. So that would be the very first time that we could have taken the long entry. All right, now price comes up here, forms a brown zone, and it does all this consolidation type thing for a while, and then it breaks out, okay? So that also means that any time in here, let's just go see those dots, because I don't want to be, how should I put this? I just want to make things simple, The software does all the heavy lifting for us, so we don't need to, like, do a whole lot. We just need to make sure that things are happening. Okay, so you see the little green dot there? Boom. That was the single bar engulf, just like what we're talking about. The brown zone forms, and now when these zones form, they do, the colors do matter here. Okay, so all zones form out with the aqua color, like that, and then every time price bounces on them or comes into a zone and leaves in that same direction, it turns the zone a different color. So like if price would to leave this zone right now, it would turn this zone blue, okay? So I love getting those type of bounces on the zone, all right? And then orange, purple, so on and so forth, all the way to brown, where you can see price just bouncing off this level several times. That's why this zone is brown, because it's been hit a whole bunch. Okay, so you can see all the different green dots that it plotted during these. And so we could take any one of those, in the idea of buying low, because we're inside the daily zone. Remember where the big daily zone is? We're inside the 60-minute zone. We're buying low to sell high. Okay, so what do we want to do as far as targets are concerned in that type of realm? Okay, how do we get into this position per se? All right, so there's a couple different ways you can get into a position. All right, and basically what I'm going to be looking for is I'm going to be looking for an entry. Like, let's just say that we take this little green diamond. I want to be looking at the first signs of resistance on my smallest time frame. So I'm going to actually turn on the dead zones here. And I'm going to be looking at, okay, if this thing is kind of ranging to the upside, if I buy low, where is the first sign of real resistance going to be coming in? And that's really going to be coming in at this zone just right above it at this time of day. So instantly I know where this level is, and I know why it's there and all that kind of stuff. Okay, I know it was formed back there, so we've had a couple bounces on it. So we've had 1, 2 bounces. We're getting to have a third. Is it going to break on the third? I don't know, but I would rather take off a lot of my position up here so that I'm sitting at close to a 1-to-1 ratio, and I take off the majority of my position right there, okay, just so that I can play it safe, so that I can get my target and that I can be sitting with the majority of my position already taken off. I get a huge payday. And so it doesn't really matter if I get T2 over here. Let's see if that was an entry at, let's just call it 17,600. Okay, so if I come over here to my big daily chart and we look to get long at 17,600, you can see that we're inside that blue zone, and T2 will come off 1 tick outside of that big blue zone right there. So that's where I'm looking for a T2. I'm trying to play the most recent extreme. If I'm going long, I'm buying low, and I'm going to sell high. And I know that this zone represents the consolidation just to the left. It's really that simple. We identify consolidation, and if we know we're consolidation, we can usually see rapid expansion in between those two levels. And I'm planning on these levels shifting throughout time. Okay, if price goes through this zone, more than likely this zone will be reformed in some fashion. Okay, it's just the way the shift of the supply and demand curves go. Everybody read about this in high school, so I don't think I'm preaching to the choir too much as it's just almost like common knowledge. So so that's really what I'm looking for, and that's how I would be keeping it simple. So, like something like 70 ticks on this down here for a T1, and then your T2, you come in at almost 500 ticks. That's not too bad. And then, well, you just make the thing look good. So yeah, sure, shoot for 1,000. Why not? There's no levels above us. So shoot for 1,000, see where you end up there. And that's really as hard as it is, Now, the awesome thing about this is you've just seen me take 3 time frames and to go into the stuff here, But not only can we do it for the big swing trade stuff, but we can also do it for the day trading, which is really where I live. But it just works so well. So we've also been doing some other markets. We're doing this the APA Swing Pub on Fridays, but today we're actually going to have, or this week we're going to have it on Thursday, as it's Good Friday, and so we're watching some of the stuff, and I'm just amazed. I'm absolutely amazed because just seeing some of this stuff pop, like. Here was the euro yen, or I'm sorry, the dollar yen. And we were watching this level on Friday, and boom, there's the pop. So we were thinking it was a good time to be getting long at the end of Friday, and boom, there it is. And now look at where your next target is up there. It's so incredibly awesome. Now, I just know where a simple supply and demand is off of my daily chart. On my 60-minute chart, all I'm looking for is the good entry. Where is support? Where can I be entering at support so that I can get that massive push? That's all I'm looking to do. Okay? I want to buy low, sell high. On my entry chart, I want to buy at support, sell at resistance. So it's it's very simple for me. It's a simple concept, okay? Now executing it is the challenge, okay? Having the patience to wait in front of your computer and not do anything until that perfect signal sets up, that's the challenge. But if we have a really simple system, it shouldn't be that bad, you know. And always take these trades with the trend, you know. Um, if you're taking the short, you're counter trend, okay? We don't like to do counter trend trades. I don't advocate doing counter trend trades because, well, the trend's your friend. Don't make it your worst enemy, you know. Um, I, we want to keep things simple, you know. So I think it is very important that we do have a trend following device, kind of like this trender here, you know. And the trender is built so that we can withstand the big pullbacks. It's really quite cool in that way. So let's go dive down into a smaller time frame. Anybody have any markets in particular that you guys would like to watch or that you guys are watching? All right. Looks like we have an ES thing, or somebody wants to watch the ES. So let's go watch the ES. Oh, well, look at that. The ES did pretty much the exact same thing that the YM did. Imagine that, considering they are indexes together. So uh, again, that was a really beautiful level. So I think that's very cool. And then we just come down here into our 60-minute time frame to find the good entry. That's all we're doing. So let's go find where that big level came into play. So you can see if we're down here at demand, we're just taking the green dots, because our trend's up, we buy the green dots, buy the green dots. The red dots, bad red dots. They are counter trend trades. Do you want to be a counter trend trader or a trend follow trader? Okay, so that's how that works, you know. But up there at the top, I mean, yeah, those red dots did work at the top. But we have to have an idea of where's the high areas and where's the low areas. If we have no idea of context, it just makes it almost impossible. So I hope you've liked what you've seen today. I know it's a super simple concept, and we're going to drill into the day trading arena here. All right. So let's do a 15-minute. I'm not going to do all the multiple time. Oh, yes, I am. I take that back. I'm going to do that. All right. So here's what I'm going to do. I'm going to take this 60-minute chart. I'm going to put like 3 minutes, or I'm sorry. We're going to do 20 days. This is going to be a 3-minute chart. And I'm going to superimpose all of the different time frames on this chart for us, okay? So I'm going to superimpose, and I'm going to take off the methods just so that you guys can follow with me on how the multiple time frames work, okay? So we have a 60-minute, and I'm going to put a 15-minute chart on here because that's usually like the minutes that I like to day trade, okay? So we're going to hit, oh, and don't forget the zones themselves. So we're going to hit apply with those 3 indicators, and now we have, well, let me kind of go through the settings here. We can use the drop-down panels to show this. So we have a 6 EM down here at the bottom. We have a 60-minute. Notice that they're just 2 lines connected with a red 60 EM up there. You know, and the reason being is, even though we have 3 time frames all coming together, if I colored in all those zones, it can get really messy, and that's why we're only connecting the lines, and the zones really do plot, you know, right then. So if you look at where the lines begin, that's really when they jumped on our screen. So I think that's very important as well. So based on our 60-minute levels, we know that that was high. This is low as far as a day trader is concerned. And then we can turn those on, or we can maybe just show only the current levels if you want to do that. I'm just going to take them off. and I'm going to show the 15-minute levels. Okay, we're going to start talking about fractal confluence a little bit. Okay, so inside that 60-minute level, we have these 15-minute levels. All right. So I know the strongest part of that level is actually at the bottom of that 60-minute level, and at the top of that 60-minute level. All right, and sometimes there's multiple levels inside here. Sometimes there might be a 15-minute level there and a 15-minute level down here, and it bounces off the bottom level. But the cool thing about fractal confluence is we can zoom in to that zone and figure out where the strongest part of that level is. And I just think that's awesome. So now we go ahead and we show the 3-minute levels inside. And lo and behold, there's the brown 3-minute zone, and there's a brown 3-minute zone. So I wasn't expecting them to both be brown, but you know what? The institutional traders can see this, and I just think it's the coolest edge in the world. I mean, using past price action to form a grid of where is high, where is low, and for everything just to being pulled from historical stuff. So it's not about having like a really awesome future predicting indicator in front of you, you know, like some magic oscillating line. It's what has previous price action told us the story of, you know. It just, there's an elegant twist to how that works, and especially how it works with, like, if you think about history and the past, present, future, you know, the past is predicting our future, you know. Like, it's just kind of a cool concept. So I just think that's fun. Because remember, it's all about the bars. And anyway, I'm just having fun today, guys. I hope you enjoy the ride. And if you guys have questions, please feel free to ask. All right. So yes, as far as the multiple time frames are concerned, they work exactly like the Apazone stuff. So there's the bounce count colors. Oh, and I forgot to mention, you can put alerts on there. You can also change the font size and make the fonts bigger. So let's say that we want the 60-minute levels for that text to be a little bit bigger. And let's face it, I'm getting a little bit older. I need a little bit of help with the eyesight. So, you know, I can make that a little bit bigger. And maybe for the zones that are all colored in, that can be a little bit smaller. So now I can tell over there on the right side of my chart what that looks like. Okay, and then when I put on my 15-minute levels, they're a little bit bigger, and the 60-minute levels, that text is a little bit bigger there. So yeah, there's some really cool customizations that you can do. And I hope that helps as well. And the other cool thing that you can do is you can also, with this software, you can also show fibs. So if you're really big into fibs, and I think the idea of fibs really intrigues me, but I cannot tell how to do fibs worth anything. So, but it's really cool when they line up with the zones. I figured that part out. But I don't know how to do a lot of the other part. So, and which one's going to be the one that it responds to? I mean, you can have some really cool confluences in here, you know, and you can see that which zones have fibs that correspond with each other, you know, from that swing down to that swing. So just stuff like that, you know. So I think that's very intriguing. Or maybe you're supposed to measure it from there. Oh, wait, is that? Okay, I just need to take this off because I confuse myself because I'm trying to figure out like 127 extensions and yada, yada, yada. And I know too much just to be dangerous with the That's about it. Watch out, I'll poke you. So anyway, so that's a little bit of the levels and a little bit of the software and what we're doing with it. And as you can see, just with all those numbers there and all the colorization of just one time frame zones, like it can get pretty busy, you know, and that's a lot of busyness, and I don't like that. So I want to keep my charts really clean, you know, so I know exactly what I'm doing. Where's low, where's high, you know, and then you buy and sell the pullbacks. So that is my trick. I'm just putting out my tricks of my trade, and hopefully it makes sense. So that's the context that I would give for this market as far as where's high and low. So we've just had a retest of the low area down here. And as I'm looking to get on board this thing, well, I want to, if I define, well, I guess it goes back to how am I going to define my trend, okay? So the way I define it is off this medium time frame, or like a 15-minute time frame here. And as I look at the trend, I can see us moving, well, the trender is now starting to roll over to the red side, okay? It's still flat, and I think that's very important. It is still flat. Even though it's made a new low, the trender is still flat, which we'll get into that in another session, but that's very interesting, okay? And that's kind of how I'd be looking at my context. So I would rather be a buyer down here, okay, because I'm looking at this level as an extreme level, okay? And I see some stuff that I really like about this zone. Obviously, it came down and kissed this 60-minute level like to the T and recoiled off of it, okay, and then came back and splashed a little bit lower. Now we're coming back up. So if I'm going to get on let's just say that I'm going to get on a trend follow to the short side, I want to sell high and buy back low, or I want to sell the pullbacks. So I would want to be a seller up there, you know, and I would want to be a buyer inside that 60-minute time frame, okay? But we got to watch the bounce count colors too of these zones, okay? So that's aqua, and oh, that's still a weekly chart. I'm sorry about that, guys. This one's a blue zone, okay? So we're getting a little weak here on the downside, all right? So we've already done, looks like a money bounce, and we're testing the extreme of this zone here, all right? So if we're testing the extreme of the zone, then what I really want to do is I want to not stand in front of the trend, but I want to play with the trend. The trend's my friend, not the other way around, you know. So I want to sell high, buy back low. All right. So the resistance levels are the areas that I'm going to be looking to sell, and I'm going to expect support levels to be breaking. Okay. Does that make sense to everybody? All right. Well, good deal. I'm glad that it is, and thank you guys for joining me here. I want to just cover a little bit on the website of what we've been looking at, the dots and the kind of the complete package with the trender and everything. That is our APA methods package, and then working over to the left, we have the generations package that does have the multiple time frame, but doesn't have the wonderful dots for that confirmation signal. And then the elements package is our most simplistic package that just has the zones and the time zones with it. And the time zones, just to make a note, the time zones are really for day trading, okay? I don't look at the time zones for swing trading at all right? Because the time zones are just the tops and the bottoms of the hour, all right? As well as that first 15 minutes, okay? So that's what I'm looking at, and I hope all of this makes sense today. Inside the APA community, we have an APA Zone Skype room where there's a lot of chatter about things going on as far as trading and people having or following the rules, people trading different instruments, looking on different 60-minute levels, just all kinds of things. So where people are looking long and short, all that kind of stuff goes on in the APA room. And then we have also a whole bunch of education on the members area of the website as well. So you have to go ahead and hit the login button here. And then once you log in, you will be directed to all the members area where you can download your software, look at different videos for NinjaTrader, TradeStation, and we also have Sierra Charts. Sierra Charts is the easiest software to install. Just another little note in there. We have a whole bunch of training videos if you want to look at those, all that kind of good stuff. That's all on the APAZone's website, so you can go in there and take a look once you become a member. So it's really cool. We also have trade plans. I think this is pretty awesome as well. With the trade plans, these are trade plans from traders that I know are consistently making money, including my trade plan. So this hasn't changed for quite some time, which I think that's a good thing. And it just highlights the things that we've been looking at, you know. So anyway, all these different trade plans are in there, and if you want to copy a trade plan and make it your own, that's fine too. We have some trade mentors that have the one-on-one trading. So some of these people have actually gone forward to helping other people out and to pass it forward, so to speak. So they are there making money, so we ask that you be respectful of that, but at the same time they give of their time in a one-on-one mentorship with people that need the extra help, or that just are brand new to trading and just want to have somebody that's successfully doing it show them how to do it day in and day out, go over trades, go over all of this stuff to make sure that they have a better understanding. So that is the APA mentorship. It's a really cool program that we started several months back, and we're having a lot of success with it. So those are just a few of the advantages of the APA zones. We have weekly training schedules that you can monitor on Twitter, as well as we send them out to everybody, just because I think education and sharing good and positive information is really important. So I really hope that what you have seen today makes sense, and if you guys have any questions, please feel free to contact us on the website. You can hit the email us button, you can contact us on our contact page, our phone number's up there. There's so many ways to get a hold of us. We really want to make the trading world a better place, and just to simplify things, and so that people can experience green days, just like Nancy. So so anyway, thank you everybody for joining us today. I really appreciate it. If you guys have questions or if you want to look at other markets, I'm going to stay around for the next 10 minutes or so and answer those and share with you Anything that you guys would like to see?